Hello, welcome back to the channel, The Hizz on Real Estate. My name is Hank, I'm your host, and this channel is dedicated to teaching you the ins and outs of real estate development. This is a short, quick video today. We're just going to be looking at and talking about some of the factors that are going on in the real estate market right now in August 2021, and whether this is the right time to buy your first short-term rental. Alright, welcome back and let's get going. So let's talk about whether this is the right time to buy your first short-term rental. It's now August 2021, and as we're mostly all well aware, the home prices are through the roof right now, and that's the same for rental properties as it is typical primary residential homes. And so the question is this really the right time to be buying your first short-term rental property? Experts will disagree on this. Many will disagree on this. A lot of the larger property investment companies are still buying properties right now, although albeit at a much slower pace. But in my opinion, I do not think this is the right time to purchase your first short-term rental property. And it's for the following reasons. It really comes down to what I like to call the holy trinity of real estate investment. So you have three ways that you can really profit and take advantage of real estate investment. One is through appreciation of the real estate. And so this is really the difference between the price where you buy at which you buy the real estate and the price at which you sell the real estate, the delta between those two numbers. Well, if you're buying at what may be the top of the market and really feels like the top of the market, in fact, in some areas now you've seen some cooling off of at least the high pressure bidding and bidding wars that goes on with some of the properties, although prices are still high. But you've seen some cooling off with that. It feels like we're probably right at the top of the market right now. And so the opportunity, if you're buying way at the top, to make a good amount of money on the appreciation alone on the real estate is much less. So obviously if you find a good deal, a one-off good deal, or if you have some, a friend who may be willing to sell it to you before it's even publicly listed on the market, and you can't get into bidding wars and things like that, and you get a reasonable price on it, this might be a good time to buy your first short-term rental. But typically speaking, generally speaking, I do not believe it is, because that one factor is because the opportunity to make out on that appreciation, which sometimes may be the only money you make on a short-term rental property. That opportunity has greatly decreased when you're buying at what feels like the top of the market. Now, if you hold that property for 5 or 10 years or 15 or even 30 years, chances are it will appreciate over time. And that's why you still see some people, especially the larger investment companies, still buying, because there is a little more juice to the squeeze. So the less opportunity for appreciation, the less ideal that property is. Now, if you're a bigger investment company, you really need to keep cranking through those deals. You need the cash flow from those deals. You need to pay employees and everything else. But if this is your first short-term rental, you don't have a lot of other properties to buffer losses and things like that. You don't have a great need to generate immediate cash flow to keep up with your payroll and things like that. I would say wait until the opportunity to cash in on appreciation is much greater, meaning when the prices have dipped a little bit and come back to natural, that might be the time to take the plunge. Now, what it is a good time for, considering we're kind of a lot of us are in a holding pattern right now, waiting for those prices to cool off a little bit, it is a really good time to get your ducks in a row. So this would be the time, especially because appreciation, purchase price, and value are so high in the market. If you already have a primary residence, for example, or maybe you even have another short-term rental property or long-term rental property, this would be the time perhaps to take advantage of that greater purchase price and the lower interest rates that you have right now, and start leveraging that equity or lining that up for a future purchase. So for example, this might be a good time to get a HELOC, home equity loan on your property. And what that would allow you to do is once you close on that HELOC, you would have a basically an ability to write out a check based on the equity of your current home, and that money just sits in an account waiting to be used. And so you would be ready to go as soon as those prices come back down. You would be ready to go to jump on that. And so that's certainly, if you are going to take out a HELOC loan, or maybe you want to refi and cash out, this would be the time to do that and to get your ducks in a row, because the last thing that you want is, you start looking for a home and you find the home that you want, and you start getting in a bidding war, or put in an offer, and then you have to wait to close on a HELOC or to close on a refi, which could take entirely too long, and you end up losing the house, and you don't want that situation. So right now might be a really good time to start getting your ducks in a row, talking to the bank about your options, talking to realtors, looking for areas in which you're interested in investing, and so it's a good time for that. Now, going back to what I call the holy trinity of real estate investment, the second factor would be that equity that you can build in a home, and the leverage on that equity, like we were just talking about using with your primary residence, or if you have other investment properties already, this would be a good time for that. And so again, not the best time for that, because again, you're not going to have as much of an opportunity to build up that equity to leverage in your home when the purchase price is so high. In a lot of short-term rentals, especially in vacation areas, the vacation market really drives how much you can charge per week for that short-term rental, not really the home prices. And so if the amount that you can charge for that short-term rental week is more or less capped here, but you're paying more for the house and your mortgage is higher, then the chance for profit is much lower. And so that would be number two reason why it might not be the best time to purchase your first short-term rental right now. And then the third factor in that holy trinity is cash flow. And cash flow is somewhat similar. So cash flow is the amount that the house or the short-term rental is actually going to kick out after expenses and mortgage have been paid and everything else. And this is really where you see the opportunity for passive income to come in. So if you can engage in mortgage hacking, have other people pay the mortgage for you through rental rates and so forth, and pay off the expenses, the money you're left with is your cash flow. And if it's high enough, then you can actually make an ongoing business out of this, and the cash flow can be a nice passive income stream. However, again, for the reasons that we mentioned, when the purchase price is high and the expenses are high, like the mortgage and so forth, then your opportunity for that extra cash that's going to kick off that the property is going to kick off. So then the opportunity for cash flow that the house is going to kick off is much lower, if any. And certainly what can happen, which we've seen in the market before, is when you buy at the peak of the market, there can be a great fall, and maybe the house doesn't even let alone appreciate, but maybe it goes down in value, which is likely. And so if you buy here and the house then goes down in value, now you have negative equity in the home, which is really not a good place to be. When you don't have a ton of property and assets already, you do have to be very careful and cautious and not over leverage yourself and not get in over your head. To me, being able to sleep at night is much more valuable than being aggressive and taking a chance on a house that really doesn't have a great opportunity for that rise in appreciation, that kickoff of cash flow, that equity that I would be able to otherwise use as leverage for my next property so that I can keep scaling up the business. So in my opinion, August 2021, looking around right now, we still have, we don't know where the moratorium on evictions is going to land. President Biden just extended that, and it looks like it's going to go until at least October. COVID numbers are kicking up. There's still some uncertainty in the market around that. although that may ultimately lead to greater opportunities for a short-term rental in some of these more remote locations where people have been going to, and we've seen that during the past year and a half with COVID, people really going not into places like Disneyland or Disney World where there's bunches of people, or cities where there's very dense population, but they're going to more remote locations. So there may ultimately be an opportunity for that. But if you check around at each of the markets, which I've been doing because I've been sniffing around, the rental prices are anywhere from or the purchase prices are anywhere from 50% higher than they were last year to I've even seen 130% or more. In my opinion, that's not the best time to buy. So if I were you, right now, I would sit back with my money, I'd get my ducks in a row, I would talk to the bank, I would try to leverage any equity you have in your current properties based on the extreme appreciation that we're seeing right now and purchase prices, and get everything ready to pull the trigger, because towards the end of this year or beginning of 2022, I think is going to be your time to pull the trigger, and you're going to be wanting and ready to go. All right, well, thank you so much for joining me today on this quick video. I just wanted to quickly review kind of the trends that were going on right now and look around and with the economic factors, and really determine if this is the best time to buy, because I'm looking for myself as well. If it were my first short-term rental, even my second, this wouldn't be the time for me to buy. I'd hold steady and wait until the end of the year or beginning of next year. So I hope you enjoyed this video. I hope you learned something from it. If you liked the video, please click the like button below, and I would really appreciate it. It would really help the channel out if you click the subscribe button below. Like I said, I'm trying to prove my son wrong, who bet me that I couldn't get 100 subscribers by the end of the year, and we're going to prove him wrong with your help. So thank you very much. I greatly appreciate it, and I'll see you next time on the Hizz on Real Estate. Okay, so you know what I think about the market right now, but what do you think? Do you think this is the time to buy, or do you think it's time to hold, get your ducks in a row, and maybe look towards the end of the year or the beginning of the next year? Leave your comments below and tell me what you think. I really want to hear.